guys, welcome back. In today's video, we are talking about how there is even more hidden swaps of AMC, the 133% ownership, changes to AMC, and many more in this video. First, we're taking a look at this. So this is from Samuel, who talks about the swaps. Now, recently, we talked about how he's discovered all of these swaps, which we've mentioned in the past, but there are even far more for AMC than I originally could find. The problem is that these aren't pulling up on the DTCC database in the USA. Not sure where these are being held. Europe is poised to begin displaying swap data in April. We'll check there. So what you can see is that there are even more that's of course being discovered, and you can see in terms of what they are from: old AMC, new AMC, APE, AMC BDR, and all four of these we have obviously talked about in the past. But this essentially is just a way of understanding truly how many shares of AMC have obviously been rehypothecated, being in terms of duplicated, used over and over again in order to short AMC. And what we've also talked about was how big this situation is. Because by understanding the swap situation, by understanding the value that's obviously attached to this, and then understanding that there are swaps with expiration dates, and when it comes to it, they obviously have to cover these swaps, it allows us to understand at what point in the future we obviously will see volatility, we will see how shorts will have to react, but more importantly, is seeing how much they've suppressed and manipulated the price of AMC. One of the things that we've obviously talked about in the past, and again is with this, is about understanding how many shares are unsettled in the DTCC. Now, this again correlates with what we talked about here with the swaps, and this is something we've seen in the past. But this is just to highlight again for those of you who don't know, or even for those of you who know, but it's just to revisit this. But it's to really knowing that 555 million shares unsettled, 9 billion in terms of notional of all values unsettled. The average price combined of all shares held is 8.72, shares held back as far as 2018. So you can obviously see, what's obviously involved with all of this. And now, what we have to understand is that whilst the shares were held as far back as 2018, you can see how the volume really came from July 2021 and afterwards, over 8 billion. So 9.6 billion is total, but 8 billion plus was from July 2021, and with obviously the combined price with an average price of 872. So even at 872, and remember, these are shares that are not yet settled, it's still above where AMC is right now. Obviously, we are at 310. And so when you understand in terms of truly how many float there is, obviously, for AMC, in terms of what should be existing and what is actually existing for AMC float, and you see how the average price and the disparity between this price and the actual market price of AMC, you realize all the manipulation that has obviously been going on. And so this is what we talked about in terms of when you compare with its competitors, when you see how the AMC price isn't moving the way you want, it isn't going up like the rest, it's because there is massive, manipulation that's obviously going on behind the scenes. And there is reasons for why we aren't seeing the bullish pressure like we should be. When you take a look at here, here's why Cinemark is up. Jute owns 133% of the float. So you can see that Cinemark going up, and what we talked about was that, in terms of the year on year, they're still improving, they're still going up, and they're up 3.66% right here as well, you guys can see. And what we talked about was the difference between Cinemark and AMC isn't based on the fundamentals. When you take a look at the fundamentals, they are all improving. And I would argue that AMC is actually doing a lot better. But again, when we just take a look at the fact that the fundamentals are improving, that is a big factor. But the honest factor, and is the only factor of why Cinemark is up and AMC is going down as opposed to going up and slightly, because that's not even happening. AMC is just going down. It isn't even going up. That's because 133.97% of float are held by institutions. And that's the only reason why. Because this is a stock that will benefit the institutions, and therefore is going up. AMC being a stock that will actually, break down these institutions are obviously met with suppression. Another thing to be taking a look at is, again, we're talking about the fundamentals of AMC. You can see here some good changes to A-list. And what we can see is what's changing. 4 movies every week, including a new in-app profile picture, new available for movie lovers age 13 plus, price updates, and of course we're going to be seeing so much more for this as well. But you can see this is what AMC is doing. They're improving obviously their business structures. They're improving how the operations are going to be, and ultimately it's going to lead to profitability, and that's the biggest part. When you take a look at the fundamentals of a company, you're obviously looking at their revenue, you're looking at the operational cost, and then from that you obviously derive to their profitability. And what we're going to be seeing is how everything in terms of AMC are going to be improving. Like we talked about, how firms improve their profit will either be by improving their revenue or by cutting down their operational cost. What we'll see with AMC is that they'll both improve their revenue, but also decrease their operational costs. So you can obviously understand how the fundamentals are improving for AMC, how the profitability is going up for AMC. But when you take a look at the difference between the price movement of Cinemark and AMC, you'll still see that there is difference. But again, it comes down to the fact that it's because it's owned by institutions with Cinemark and not by AMC in terms of the ownership like we've discussed in the past, and that they obviously don't want to pay tens of hundreds, if not trillions of dollars towards the short positions that they obviously have towards the retail investors, and that's why they continue to suppress our price. Another thing to obviously look at, and you can see here, AMC Entertainment Holdings debt has seen a decrease of 17.53%. Now understand that the decrease in percentage here is good because it means less debt. And we've talked about how less debt means less interest payment. It means that we are in a good financial position because we are able to pay off debt. It means that we have more disposable cash to obviously use on other areas, which again further improves the fundamentals. And so honestly, there will be people who will try and, nitpick in terms of a bad factor of AMC's fundamentals. Now, of course, AMC is not a perfect company, but when you take a look at as just a company, as how it's doing, I do believe that their fundamentals are actually very, very good and will continuously stay good, if not improve. And I am interested to hear what you guys think. Like I said, there's always going to be pros and cons. Not everything's perfect. So potentially there are, of course, aspects that will be bad. And so I am curious to hear what you guys think about it, because we want to obviously have a healthy discussion. And if there are bad aspects which you think could AMC obviously could improve on it, then comment down below, and we can obviously spread the word, and potentially AMC's management will see it and improve from that. Now, you can also see another way of how they're manipulating AMC. Bring AMC volume off exchange to make official volume look tiny. Pinning the price, pumping a bunch of arbitrary small stocks, and promoting the idea stuck for another year in the hope that AMC apes will jump ship for red herrings. All they've got left, those shorts. So this is a very, very important thing. And it's about understanding, what AMC's price is actually reflecting. What you will see here is 62% off exchange for AMC. So the argument I always say, and it's one of the things I focus on, is that when people are saying that AMC's price is going down, why would you still invest in AMC? AMC's price going down, it means people are selling. Well, again, I don't think that's the case when you take a look at the off exchange. If so many of the volume, if so many of the trades are routed into the off exchange, and we know that mainly what happens in the off exchange are obviously buy orders, so orders that will actually positively affect the prices, but because they're in the dark pool, they don't have that effect, then it lets us understand what's happening, because it will take us potentially 3 times, 4 times, 5 times more the buy orders coming in for AMC to actually negate the sell volume. Because what we talked about in the past is that there could be 100 buy orders coming in for AMC, but because, you know, 95 of them are in the dark pool, so only 5 is hitting the lit exchange, it will only have an effect of 5 buy orders as opposed to 100. But if 10 sell orders come through, but all 10 are hitting the lit market, then obviously it will have a bigger sell pressure. But then that doesn't actually reflect on what retail investors think of AMC, because it's not showing us fully, you know, what is happening. And so it's why I say that AMC going down is a reflection of manipulation, suppression, as opposed to what actual investors are thinking. As always, not to say financial advice, so do take a second consult. Make sure to do your own due diligence research, and I'll catch you guys next time.